here we go. Just a quick cash course on the strategy. And just get rid of a few lines real quickly. Um, okay, basically the strategy works like this. What you want to find first is, I'm gonna delete this because it wasn't necessary. Firstly, what you do is you identify. I've been looking at the charts for a while now, and I've been watching a couple of YouTube videos, and this is what I have seen happen in a lot of charts, in currencies, and in the Riv. It works the same. First, you need to find the direction of the chart you're at. When I was analyzing this chart, we were selling. The market sold, it went down. If the market is selling, it's going down. If the market is buying, it's going up. So when I was analyzing the chart, the market was selling. It was going down, and then I found my two FVGs, which is the two blue rectangles on my chart there. And FVG is a area in the chart where the market moves rapidly and leaves a gap between three candles, right? If you look at the bottom blue rectangle, the one with the two red lines in it, the market moved down and left a space in there where there is no wick or candle in that gap, meaning that the chart has to come back and fill the gap, which is our FVG. So because this market was selling when I was looking at it, it was going down, it was on a downtrend. I was looking for selling opportunities. Now, what do you do when, or how do you take your sells and how do you take your buys? See, when you find your direction, which would have been down, and you found your two FVGs or one FVG, it doesn't always have to be two. You wait for the market to come back into the FVG, and then what you're looking for is rejection and a candle that closes below the FVG if you're selling, and if you're buying, you're waiting for a close above the FVG in a different color candle. For example, in this chart, if you look at it, the market went all the way down, and created our two FVGs at the top there, and then the market went all the way up as if to retest. But when it got to the FVG level that we were waiting for, the first one, we would have been waiting for it to enter there, which it did, and we would have been waiting for rejection, which is a wick within the FVG, and the close below the FVG. Now, in this scenario, the chart did go. Let me delete the other line so you can see where my focus is. My focus is right over here. The chart did go back into our first FVG, but what happened when it reached that first FVG? Our chart over here broke above the FVG. So instead of it doing a rejection, it broke above the FVG. It closed above it with a full candle and not just a wick. And whenever it does something like this, we invalidate whatever analysis we had. So instead of looking for sells, if it closes above the first FVG like it did over there with a full body candle, we would have been looking for buys now. So since this chart over here closed above our FVG and we're looking for buys, how do we get our entry into the buy? So now you wait for the chart to reach your FVG, and if it closes above the FVG and invalidates your previous analysis, you switch to buy mode instead of sell, and then you wait for the chart to go below the FVG again as it did over there, and then you wait to see if the chart is gonna go above the FVG again for a second time. If it does go above the FVG again for the second time, then what you will do is you will wait for it to come back into the FVG again, like so. As you can see, it came back into the FVG, and that's when you wait for your rejection and a close above it. So let me remove these other two lines so you can see where my focus is at. My focus is right over here, right? I'm sorry, the line won't move. It went back into the FVG, it rejected, it didn't break below it. There was a wick within our FVG, and it closed above the FVG in a different color candle, therefore reinforcing the fact that we are no longer selling, we are buying. So now, when do you take your entry? If it comes back into the FVG after breaking it twice, sometimes it breaks just once and then comes back. If it comes back into your FVG and then rejects, doesn't break below it, and then breaks above it again in a different color candle, you take your entry as soon as the green candle closes. And when you take your entry, you will have your stop loss directly below the red candle that rejected and couldn't break below the FVG. And your take profit in this kind of scenario would be most recent high, which would have been here. But because we've just broken structure and we are now, that would have been your first take profit. But if you are a little bit greedy and you want a little bit more money out of your trade, you would target something like over there, right? It's a good risk to reward. And usually what I do, I go in with high lot sizes to get a lot more out of my trades quicker than I normally would. So for this kind of strategy, you would need to start with something like a 500 or 1,000 rand account. And as you see here, you would have made round about 2,000+ rand in a very short space of time, right? So to summarize what I've just said there, you first find your market direction. Where is the chart going? In this case, it was going down. It was going down. You find your FVGs, which should have been the two blue rectangles. Again, an FVG is when a chart moves rapidly and leaves gaps within candles, where no other candle has went in, where no other wick is within it. After you find your FVGs, you wait for the chart to come back into one of them. When it gets into one of them, usually the most recent one, you wait to see what the chart does. If there's rejection and it closes below that FVG, then you would have taken a sell opportunity. But because in this case it closed above the FVG with a full body candle and not just a wick, you wait for the chart to come back down and break the FVG again, and then you wait for it to come back into the FVG, and when it comes back and leaves your rejection and closes above the FVG again, you would have taken your buys. However, as I said, if it comes into the first FVG and it rejects and closes below it, immediately we would have taken a sell opportunity, and we would have taken our take profit at our most recent low, which would have been here, right? That would have been the low that we would have taken as our take profit, and our stop loss would have been directly above the candle that closed below the FVG, or you can just leave your stop loss at the top of your rectangle or your FVG. You just leave your stop loss there and you target the low there. That would have been a nice risk to reward, especially if you're going to go in with a higher lot size. You would have made a lot of money from here in a very short amount of time. So this is the strategy, guys. If you like this content, like and follow the channel. There will be more content coming soon, just don't know when. And if you have any questions, leave a question in the comments, in the comment section, and I will get back to it as soon as I possibly can. But to reiterate, the checklist for this strategy would be: find the direction of the market, find your FVGs, wait for the market to come back into your FVGs, see how it reacts. If it rejects and closes below or above your FVG, depending on whether you're buying or selling, you will take your entry, and your take profit would be the most recent low or most recent high. If it breaks your FVG with a body, full body candle, and not just a wick, then you change analysis. If you were selling, you're gonna be looking for buys. If you were buying, you're gonna be looking for sells. When do you enter? If it breaks your FVG, you wait for it to break it again, or sometimes it doesn't break it again, it breaks it on the first time. You wait for it to come back into that broken FVG. You wait to see how the market reacts when it gets there. If it gives you a rejection and then closes above the FVG like it did here in this scenario, then you would have been taking your buys and not sells. And that's the strategy right there. Your stop loss will always be below the candle that broke above the FVG, or the candle, or just below your FVG, right? For people who are going to be trading currencies, your stop loss needs to be a little bit lower than that because of your spreads. I would say if you were entering a buy here, you would have put your stop loss at the most recent low, which would have been there, and your take profit would have been the previous high. And yeah, that is what we do all the time. This strategy really works, and it minimizes your losses, maximizes your profits, and you're gonna lose a lot less trades than you normally would. And if your risk to reward is good enough, if you follow the strategy, you will always be in profit. So yeah, that's the strategy right there, and let's make some money.